and get into a conversation with corporates. And on the show, we have Mr. Bhansali, the CEO of Finance Strategy and Business Development and CFO of Emami, joining us on the show. So good to be chatting with you, sir. Talk to us about how Q3 has shaped up for you and the company. It has seen a significant pickup in growth. With favorable winter aiding volumes, how much of the demand pickup is seasonal versus structural improvement in underlying consumption?
Yeah, so all the engines fired up, you rightly said, and we have delivered double-digit growth for this quarter. So there was some transitional impact, GST2 transition impact as well. But overall, the season had also played well, and we had made not many structural structural initiatives. Distribution has improved, marketing. So all these things has gone very well, and in fact, the growth has come from all the brands and all the channels. So we are satisfied that the growth has been in line with our expectation, and that is also supported by a volume growth of 9% for the quarter. And the international business has also joined with the overall 9% INR growth. So broadly, a good growth.
Okay, so you are happy with the kind of growth that you reported. But Mr. Bhansali, let's also talk about urban-rural mix then. I believe urban demand continued to show improvement in the quarter gone by, but rural demand continues to remain resilient. If you can take us through the kind of trends that we're seeing and what kind of mix do you expect going forward as far as urban-rural mix is concerned?
Yeah, we expect the same kind of a mix. There will not be any substantial change going forward. Though rural has been, as the growth has been little more, in fact, it is resilient, and urban is still gradually improving. But overall, the both has maintained their mixes, and we expect rural to ramp up further. Urban would also join over a period of time.
Okay, and also talk about your margins going ahead. 20% of the portfolio has seen grammage cuts. So talk to us about how are you going to maintain value growth as well as margins going ahead now that this GST impact seems to be largely behind the FMCG pack and overall companies also. Talk to us about what is the outlook on margins going ahead?
Yeah, for the quarter also, if you have seen, we have gross margins have expanded, and also the EBITDA margins have also expanded. So both there has been a slight improvement there. Going forward, also we expect the same kind of margins to continue because we would be investing behind the brands, and costs have been relatively benign, though there have been some items, some agri items, and also the metals, the cost of which has increased. But despite this, we feel that overall the cost would remain benign, and gross margins would remain at the same kind of a level, and EBITDA margins, because we would be investing behind the brands also, we expect the same. And if you know, we enjoy the highest EBITDA margins among the peers. So we would not be behind in investing behind the brands despite the highest EBITDA margins.
Right. So you're expecting input costs to remain stable and hence gross margins are expected to remain at the current levels going forward as well. But also wanted your thoughts on volume growth, especially if you can give a guidance for the fourth quarter and for, say, the first half of FY27. Since 88% of your portfolio is now under the 5% GST bracket, what kind of volume growth are you penciling in?
Yeah, you rightly said, substantial portion is under 5% bracket. And for the fourth quarter, see, because it will be dominated by the summer, and the winter has delayed and summer also has also delayed. But despite this, we are expecting kind of a mid to high single digit kind of a growth for the fourth quarter. It is very difficult to predict for the next year or further from there, but we always expect, and we are prepared for and poised for a good growth to come in. It is difficult to put a specific number at this point of time.
Okay, fair enough. And going ahead, also talk to us about the summer portfolio. Before that, I just want to talk about the winter portfolio too. BoroPlus and healthcare products have seen strong traction in Q3, given they're largely winter oriented. So first, tell us if that is sustainable going ahead. And secondly, BoroPlus and, Navratna and Dermicool, they've seen slight softness given that we were in the winter phase. But the upcoming summer, talk to us about what is the outlook when it comes to all of this, given the seasonality.
Yeah, BoroPlus has delivered a very good growth. In fact, a 16% growth for the quarter. And for the Navratna or the summer production, this was not the season. So we expect in the next season to deliver a good growth from there. Navratna, Cool Talc, particularly the talc range, to Cool Talc and Dermicool, are since there has been some delay, but overall, if you look at the season, we feel that even if it is delayed, the season has to deliver a good growth.
Right. Also wanted your thoughts on your international sales. They have registered a growth of about 9% on a year-on-year basis in the third quarter. How much sales do you generate from your international business? And two, do you expect international sales growth to be higher than your domestic sales?
We generate around 15 to 17% kind of overall contribution from the international business. And the growth would remain in line with what is there in the domestic as well. Probably it may happen that in few countries going forward, there could be some higher growth. But then looking at overall portfolio, we believe the growth would would happen in tandem with each other.
Okay, so that sounds optimistic going ahead. Thank you so much for taking the time out and joining us, Mr. Bhansali. And congratulations on a good quarter. We hope to interact with you next quarter as well. Thanks so much.
Thank you.
Okay, viewers, on that note, time to slip into a very short break, but corporate conversations will continue on the other side. So stay tuned and we'll be right back.